All right, guys, back to work. Hope you guys had a restful weekend. Buckle up. Got a big fourth week of the month ahead of us. Boy, markets are range-bound in the big news and big earnings later on in the week. Now, range markets, they can be a bit tricky at first, right? But once you learn how rotation works in range markets, you will quickly see how easy it is to make money in the ranges we're seeing here on the chart tonight. I have two range plays I'm tracking for tomorrow, one on the S&P and one on the NASDAQ. By the time we're done tonight, you'll have an easy roadmap to make some money on range-bound markets on Tuesday morning. Now, before we jump in and talk my favorite trades for Tuesday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in and supporting our channel. But let's go make some money this fourth week of the month of May. Boy, charts are all ready to go here. NASDAQ triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have three very simple but very important clues on these charts right now that are telling us where the winning trades are waiting for us tomorrow morning. One of those clues is right here on this 60-minute time frame. We are bullish overall on the S&P and SPY, bullish overall on the NASDAQ and the triple Qs. I like to use these 60-minute charts to give us a good idea of the overall directional bias. We know the long side trades are where the odds are stacked in our favor right now, but the 60-minute chart, it's good for direction, but it's not going to help us find levels of support and resistance, and it's certainly not going to help us time the best entry. I like to use tick charts to time the entries, and I have two more important clues on those tick charts, which we'll cover here in a moment. Before we do that, though, let's check our schedule for Tuesday's trading session. We don't have any major news on the schedule for tomorrow. A bunch of Fed speakers speaking tomorrow. I don't expect that to be the big catalyst of the week here this week. The focus now really shifts right now to a couple things. The FOMC minutes on Wednesday afternoon, the PMI number on Thursday morning, and right between that, we have what is arguably the biggest catalyst of the week this week, NVIDIA earnings coming out after the close on Wednesday. So no major news tomorrow. I wouldn't stress out too much about the Fed speakers tomorrow. Everybody watching for that NVIDIA earnings coming out on Wednesday evening. So we'll cover more about that tomorrow night on Tuesday evening's video newsletter. So be aware of that for tomorrow. Now back to our charts though, because it's good to know when the news is a bit later on in the week. Big open day for us tomorrow, but the money is made on the charts. Let's now go to my favorite trades here for tomorrow. I mentioned earlier, there are three important clues. One of those clues is right here on this overall directional bias from our 60-minute chart. But again, the one thing the 60-minute does not help me with is entry timing. I like to use tick charts in our trade room because tick charts, they make pattern recognition a hell of a lot easier. This, by the way, is a 7,000 tick chart. See up top there in the upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. This is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades each week in our trade room at 8 o'clock Eastern time. There are two more important clues right now. One of them is this range above us. We have a bull market up into a trading range. Now, if you're taking my free video classes right now, you know two things about ranges. One is that ranges act like magnets, and two, they love to rotate back and forth. They'll rotate down, up, down, up, down, up, and usually we can measure the amount below, the amount above, the amount above, the amount below. They like to rotate back and forth. Keep that in mind. That's clue number two. Second clue in the tick charts, and the third final clue is the strength of that move going lower. One of the most important things you need to learn with day trading is it's good to know the overall trend, but the short-term momentum of the market is one of the most important things for timing the proper entry. Anytime we see a strong move in one direction, well, I shouldn't say that. Anytime we see a strong breakout of a trading range, there are two things we know to expect. One is a strong breakout leg likes to complete a measured move with a good idea of where there are going to be some support levels down below. Now, we're overall bullish right now. We know the very least, though, the sellers are going to want to pull back and retest that low. If you recall, late last week. Had a situation like that last Thursday night, right? Last Thursday's video, range market, strong breakout going lower. They complete their measured move. If you watched last Thursday's video, we pretty much walked our way right on through that. So that's a really, really important clue. I would think one of the most important clues there for timing the right entry. So with that said, we're expecting this range overhead to try to drag the market higher and potentially complete a big symmetrical pendulum swing going higher up there, but we have to think these bears have a lot of that short-term momentum, and it would be in our best interest to respect that momentum. So, knowing that is the case right now, I would love to go lower, take out that low, or even better, take out that measured move. Really anywhere down around this area. Let's get this trying to go lower, and then what I'm looking for tomorrow morning in our trade room is one of those failure into trap combinations. So, for example, as we go lower here, I don't know how far it'll go. Somewhere between that 23 3/4 and that 53.15 area. That's the buy area. But I'm not going to pick the bottom. I'm not going to blindly buy that area. For all I know, it'll keep going lower. So what I'll do is I'm going to let the market go lower, or an overall bull market. So as it goes lower, more buyers come in, and not a great place to be a seller because that range above us is a magnet. And again, we're bullish into that range. So let's see if we can get some bears coming in. If I can get bears trying once and trying twice, see, now I am trapped now. Now I know where their stops are. And think about this, guys. If you are trapped short and you get stopped out of a short trade, what happens? You have to buy your way out of that position. An easy bear trap. I call these failure patterns in our trade room, failure patterns in the free video course. And then watch closely here. We know where the market wants to go. It wants to go back up into that range, up overhead, and pendulum swing going higher. As we go higher, there's one pattern we always look for to buy as low as possible, and that, of course, is a bear trap pattern. Now, bear traps are very simple, but it takes a bit to learn them. There's one actually right there, right? It's a higher high in price and a move right below that low. We go up, pull back, higher high in price, trap right below that low. I want that pattern over here as well, right? This would be a failure pattern first. One try, two try, trap those bears in and squeeze their stops going higher. If we get that higher high in price, then grab that beautiful bear trap right below that low. And again, targets are back up to retest that high. Now, that is kind of the dream scenario here as we go lower. Problem though is sometimes in a bull market like this, sometimes we'll get that run going lower and we don't get that two try back up again. Sometimes there's so many buyers down there, it'll kind of boing off that low and turn into what we call a V bottom reversal. Got to be mentally ready for this one because this is going to be difficult on the emotions. I want to buy down here and I want to get that two try failure into bear trap we talked about there a moment ago. However, if it doesn't give me that signal, if it pops back up, what will happen is it'll begin to grind. And as it grinds going higher, this is your giveaway. Now, remember, the market wants to go back up into that trading range. I want to buy nice and low. I don't want to buy high. The next best thing now is watch closely here, draw a trend line off those highs, bring it down and pin it right at that low. And then as we always say in these videos, look left, find one of these prior swings. And I want to find really any of the entry patterns we teach in the free video course. I want to buy that first test off the low of that channel. See how that pullback is the first pullback off the low of that channel? That is where the magic happens. Now, this could be a trap pattern like I'm showing you here. Oftentimes, we get below the 21 moving average, get one of those failure patterns into pullback combinations we talk so much about in the free video course. But really, any of the entry patterns you guys are learning in the free video classes can be applied at the low of that channel. So if we don't get that failure pattern off that low and it pops up and goes higher, whatever you do, do not chase after it going higher. You want to buy that first test off that low. And again, it could be a bear trap. It could be a failure pattern, a pullback combo. If we're lucky, maybe a strength trade on the way way going higher. I know most of you guys know this terminology, but listen, if you're here for the first time right now, I know most of you guys know these patterns already. You're making money on failures and traps and, of course, range rotations. But if you're watching for the first time right now, this might be a brand new language for you. What the heck is a V-bottom reversal? What are traps? What are failures? Don't you worry. I teach all these entry patterns. I have hundreds of examples of all the setups to talk about right now. I teach all this in my free video classes. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, hit that link that popped up there and take that free trading course, because the strategy you're going to learn in that short video series will teach you a surprisingly simple trick we use in our members trade room to know exactly where the best winning trades are going to be every day. And most importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns. You'll learn failures, traps, and a whole lot more. Guys, the markets are so good right now. If you're not making consistent money every day, if you're missing the best trades, if you're struggling to qualify for a funded account at Apex or Top Step, hit that link, take that free course. It's perfect for someone trying to make the jump into full-time trading. Also, keep in mind too, I'm going to put all the important links we talked about tonight, the description of the YouTube video, put the free class links down there for sure. Start there. We trade together every day in our trade room. I'll put trade room membership information, description there as well. Also too, I post a lot of videos, charts, mindset stuff on Twitter or X throughout the day. If you're on Twitter or X, give me a follow. All the details, description of this YouTube video. But now you know though, if we do end up going lower, it's that failure into bear trap combo. Again, anywhere down below this low, I want that failure into that bear trap combo. Now, that's kind of the ideal scenario. What if we go higher here though? Well, if we go higher, what's the problem? I don't want to forget about the strength of that move, right? Because we have to respect, remember, short-term momentum is very, very important as far as picking the right entries here. So if we go higher here, that doesn't mean these bears are done by any means. Also, too, I want to buy as low as I can. Remember, whenever we go higher, there's that one pattern, right? That bear trap pattern. You need to learn trap patterns. They are one of the easiest ways to make consistent money in pretty much any market you want to apply it to. If we end up going higher here right now, there are 2 types of bear trap patterns I'm watching for tomorrow. First one is this kind of sleeper pattern down here, this hidden bear trap below that low. Now remember, it's bears coming in once, it's bears coming in twice, kind of the same pattern, right? If we go higher, most folks, when they think about bear traps, think about this pattern, right? Strong move up, shallow pullback, and that move right below that low, right? Most folks think about this as the bear trap going higher. If you were to look at this pattern right here, all that is a move down first, then bears once, bears twice, trap right there. Makes sense, right? So it's a little more difficult just in the chart there. That's why I said this was kind of a sleeper pattern here. But if we wind up going higher here, do not be surprised if they hold the underbelly of that range, because ranges love to break out pullback. Do not be surprised if bears come in, try to run this thing lower, because again, all that strength going lower. However, though, if they can get underneath that 27.25, if we can then get a strong signal candle, green candle, closing firmly above that 21 EMA. You're going to learn these entry rules, by the way, in that free video course I mentioned linked up top there. If I can get that, that is the signal now for what we call, it's basically a bear trap pattern. It's basically a crown reversal pattern. We talk about that, of course, in our video classes, right? So bears once, bears twice, buy as low as you can. Think about where those stops are. I just don't want to buy as it's going higher. I have to respect this thing. It may try to go higher and snap back lower, take out that low. Then we get that run going higher here. So be very careful chasing after it. And then, of course, if it does go higher here, we kind of know where the market wants to go, right? It wants to go back into the range. More importantly, though, it wants to complete a pendulum swing. So think about this. If we do get this market now running higher, I want you to think about these 2 entry patterns. One is the bear trap. That's the easy one, right? So bear traps are always going to be my bread and butter as we try to make our way going higher. Right now, as we get up, as we start running higher here, I do not want to buy high right now, especially a couple days ahead of those big NVIDIA earnings later on in the week this week. Whenever I'm worried about buying high, after a range breakout, I want to get a breakout pullback. Breakout pullbacks are very, very common, but be careful though with this. Watch closely on this. If I can get me some bear traps going up, take out that move going higher. Now, think about now the top of that range. That's the buy zone. When I think about a breakout pullback, I think about a two-legged pullback. Two-legged pullbacks are simple. It's one leg under the moving average, a second leg. Now, in the free video course, we talk a lot about measured moves, right? ABCDs. So A, B, C, D. When I think of a two-legged pullback, when I think of a breakout pullback, like in this example, I think of, again, bear traps on the way up. Once we get up around overhead resistance, we don't buy up here. We take our profit up there, and we wait for that one leg, two leg, a bit more than a measured move. Now, of course, I can't predict the future, right? I don't have a crystal ball on that. What I do know, though, is this area is a key area of support. What I do know is overall bullish. Now, in this example, it's bullish short-term momentum, right? I can be a lot more aggressive on this one now. So as we now pull back now, do it again. Trap those bears in. Two-try rule. Why two tries? Because I want those stops to squeeze, right? I want to squeeze those stops and make a run where? Back up to retest that high. Remember, it's that failure into that bear trap combination. Now, one cool thing about range breakouts, as I mentioned earlier, is the size of that breakout leg can be used as a measuring leg, right? So once we know how big that breakout leg is, then we can pin it down there at the lowest part of that pullback, and that will give us an idea now of where to leave that runner. You know, guys, the easiest way to make more money in the markets is not to trade more often, it's to get better at picking good entries and leaving trades to run. Whenever we see a range breakout, think about that breakout leg. And again, I wish I had more details right now, but breakout leg, pin it off that low, and that will give you an idea there for where that market wants to go for a runner. So whether or not we go higher or go lower, hope we get that run lower, that bear trap running back up. But again, don't be surprised here if we run higher here. Keep in mind on that trap right there. Keep in mind on that bear trap up, and then again, that two-legged pullback, failure into bear trap combo on the way going higher. Don't pick that bottom, right? Don't pick that bottom. One leg, two leg, a bit more than a measured move. A lot of examples of those inside the free video course. Now we're ready if we go higher or if we go lower. Now, I mentioned earlier, the S&P and NASDAQ are a little bit different when it comes to the game plan overall. Let's now grab the NASDAQ right now. NASDAQ is like the S&P, but you'll notice it is quite a big different. NASDAQ, of course, overall bullish right now. You probably don't need me to tell you that on the 60-minute time frame. But again, the 60-minute chart is not going to give us the best entry direction. I'm going to go down to my 4,000 tick chart now, upper left-hand corner, same 21 EMA. NASDAQ has two important clues of its own. One is this trading range. Again, we know that ranges are magnets. In a bullish range, I want to trade that rotation, right? Buying low, selling high, buying low, selling high. And again, bull market, buy underneath that trading range. Use that range as a magnet. That's one of the most important clues we have on the chart on the NASDAQ. Another important clue, though, is look where we're coming from. A previous range from last Friday. Now, what did we just talk about on the S&P? Whenever we have a breakout of a trading range, what do we always look for? A breakout pullback. And that was again, what was it again? It was a two-legged pullback, a bit more than a measured move. And so right there, I mean, really that is likely where there's a lot of buyers waiting there to buy that run back higher. So if I had my way for tomorrow, the trading gods are looking down on us right now, right? That breakout pullback will be ideal on this. Now remember, we're not talking about picking the bottom on this, right? If I can get that run going lower, I'm going to look for that same 1, 2, trap those bears in, use that failure pattern we talked about earlier, a failure into what? A failure into a bear trap combination. as we go higher. Now, remember, these come in lots of shapes and sizes. Oftentimes what happens is, I'm going to get that failure. We're going to run up. I'm going to get my first profit target. It's a winning trade. But again, oftentimes the underbelly of that range will hold. Keep in mind, they may try to retest that low. Remember, it's an overall bull market. This retest of that low is not a reversal. It needs to go a lot more than that to reverse this overall bullish trend. In this scenario, think about this. Anybody who sold short on that breakout pullback of that trading range in a bull market overall, they're probably taking their profit where? Down at that low. Sellers up here become buyers down here. Now, who would who would sell on that next pullback? Not professionals, right? Professionals will sell high. They're taking their profit down here. Professionals are being buyers down there. So who comes in here? Rookies, right? Rookie traders. And these are traders who want to squeeze. Let those bears try once. Let them try twice. Trap those bears in. We call these double bottom reversals. Again, strong run down. Do not be surprised. They pull back, retest that low. It is not a full-blown reversal. And I'll tell you right now, these double bottoms are oftentimes more lucrative than the initial trade because oftentimes these ones are now even lower. More buyers want to buy low. Rookies get trapped in thinking it's a reversal, and we now get that run back up to retest that high. So again, same idea here, right? It can be a double bottom there as well. Don't confuse that double bottom with a reversal. And again, it could be here, anywhere down here, anywhere underneath that low here. Keep looking for that failure into that bear trap combination. You can have a lot of examples of that in that free video course that's linked up in the description of that YouTube video. And then don't forget too, right? Sometimes, not my favorite trade in the world, but sometimes what happens is sometimes you get that V bottom, right? That V bottom off of that low. And when that happens, look back here, right? Look back there. Whenever we see a V bottom like this, all you gotta do is connect those highs, bring it up off that low, and remember, look, get underneath one of these prior swings. That is the recipe for making money on a V bottom, all right? So it runs lower, it pops back up, begins to grind, going higher here. Again, usually what happens is your emotions, at least for me personally, whenever I see a V bottom like that, I always get a bit frustrated, right? I'm itching to get into something. I want in. Just don't chase after it though, because again, that pullback will be coming your way here soon off that high, off that low, right? Off that high, off that low. And again, look left, find some prior swings and try to get in. Again, could be a trap pattern like this, could be a failure pattern, any of the entry patterns you guys are learning in that free video course. We know where the market wants to go, wants to run back up into that trading range and potentially slingshot all the way or pendulum swing all the way back up. Number two, right? If we get a bigger breakout, right? If it's a bigger breakout going lower, now that pendulum swing is up here, right? It's going to be a larger symmetrical play going higher. Now, how do we buy a breakout, right? How do we trade a breakout? In fact, actually, one more thing here, and then we'll talk about going higher. I almost forgot here. Buying shallow pullback traps. Shallow pullback traps. So real quickly here, I would like to go lower and buy nice and low, right? Failure pattern back up again. Sometimes all that happens though is all it does is, for example, you got that pendulum swing right there, right? We may not get that deep pullback. We may end up going lower and it may try to run back up again. If all we get is a shallow pullback on this, and you'll know because it'll kind of V bottom and run back up here. If all we get is a shallow pullback on this, you want to buy as low as you can. And to do that, you look for what we call buying shallow pullback traps. It needs to be a bear trap pattern on a shallow pullback because that will allow me now to risk small to earn large, right? If all I get is a run lower and it's a 1, 2, and I'm buying up here, now my risk is here, my reward is right there. It's not as attractive anymore. Make sense? Risk reward ratio is one of the easiest ways to filter which trades are most likely to be a winner for you. If I can wait for a bear trap entry on this, if I can get in underneath a prior swing, higher high, prior swing, then go higher. Now think about this. My risk is here. My reward now is right there. See, that is a lot more attractive trade. The more attractive that trade is, the more people will take that trade. The more folks take the trade, the better off it works, right? It's called a self-fulfilling prophecy. It's amazing how risk-reward ratio can really kick up that self-fulfilling prophecy, especially when you combine it with that short-term momentum I talked about earlier on the S&P. So bottom line is, if I can get that run lower, sure, 1, 2, back up. I'm not worried about risk-reward ratio there, right? That's not the issue on that. A shallow pullback, though, it's always about risk-reward ratio, and therefore traps are going to be your best friend to make sure you'll get that lopsided risk-reward ratio, risking small, right? Risking 10 to make 30, risking 20, right, to make 60, right? Risk small to earn large. Traps are going to make sure you're always risking as small and earning as large as possible. And of course, the breakout's pretty easy. We talked about this earlier on the S&P. When I think about a breakout pattern, I think about two patterns, right? I think about that bear trap pattern on the way higher. I don't want to buy high during that breakout, so look for a bear trap. Usually what happens in these cases is that first leg is your breakout leg, creates that measured move. That will tell us there where to take our profit targets, right? Again, a lot of times breakouts become measuring legs when we talk about a range breakout, right? So breakout leg, measuring leg. Then once we take our profit up here, we don't keep buying, and we certainly, again, because we're so bullish right now, we try to avoid the temptation to short this thing for a pullback. I don't know how far this thing will go. So if you're trying to short the top on this thing, be very, very careful on this. What I'd rather do, though, is now look left. Use what was resistance overhead. Use that now as support. And then remember that two-legged pullback, right? Get underneath the moving average. Think about one leg, two leg, a bit more, sometimes a lot more than a measured move. Okay, that will give you the general area of the entry, two-legged pullback. But again, I'm not going to pick the bottom blindly here. What I'll do is I'll wait for it to pull back to the moving average. And once it does, and I start seeing bears come in, this is a very, very poor location to be selling short, because in this example, all of that bullish momentum, remember, short-term momentum will keep you focused in the right direction. One of my first mentors would always say, Joe, if the market is bullish, your job right now is to trap traders on the wrong side of that 21 EMA, squeeze those stops with failure patterns. And one of my favorite trades, of course, is that bear trap combination going higher. Again, this will oftentimes become a larger one leg into two leg there. That will give you an idea of where to leave that runner to squeeze out as much profit as we possibly can on Tuesday morning to Tuesday afternoon. Guys, that is the game plan on the S&P and the NASDAQ. Now, tomorrow morning, don't forget, 8 o'clock Eastern time, come trade this stuff with us. The easiest way to start making money in these markets, to learn and trade along every morning in our trade room. I'll put all the important links, the free class links, the trade room membership links, the Twitter feed stuff, everything in the description of the YouTube video. I would definitely recommend start first with our free video classes, learn the basic strategy, and don't forget, any questions, any issues getting started, you can always use live chat or call the office if you guys have questions or trouble getting started with our free video class. All right, guys, hope you learned a bunch tonight. Hope you use this knowledge to make a killing tomorrow morning, and hopefully I'll see you sometime soon. Trade with us as a member in the morning trade room at 8 o'clock Eastern time. In the meantime, be well, be nice to each other out there, make some money on Tuesday, and we'll see you guys next time. Adios, amigos. Bye for now.